The times they are a-changing, are they? Well, there are people actually predicting that the market's in a bubble or certain segments of the market are in a bubble. For example, that guy that said that index funds are in a bubble. A lot of people are buying S&P 500 index funds, total market index funds that overweight really big companies. And there are people out there saying that everyone's selling the stock market's best performing stocks and here's what they're buying instead. Watch out for this kind of stuff, folks, because this is market timing. Now, we typically think of market timing as I'm 100% in stocks. I think the stock market's going to go down, so I move money over to cash or vice versa. But it's more subtly employed by the investing industry. They'll say, to set up a diversified portfolio and shift money around between these areas based on what you think is going to happen in the future. They didn't make market timing any simpler when they decided to time between 10 and 15 and 20 different asset categories versus 2. It's much more difficult. In fact, pension plans, when they engaged in this, they found that investment performance was almost not affected by market timing activity and stock selection. As a matter of fact, it was negatively impacted when they employed these strategies. Asset allocation was everything. How much money do I have in large companies and how much money do I have in value companies and small and international and US and fixed income and bonds and all of these different categories. That's what drives performance more than anything. Now, if we look at why market timing doesn't work, we'll find that if I put $10,000 in the market in 1998, and you got 5,040 trading days, 10,000 grew to 40,000. But what if you miss the top 30 days? It's only 30 days out of 5,040. You find that actually you lose money if you miss the top days. So for somebody to try to figure out when markets are going to do better than others, it's a pretty difficult process. Anytime you change the mix of your investment portfolio based on a prediction or a forecast about the future, that by definition is market timing. Don't try this trick at home.